The housing market is heading for significant changes, and you can't afford to miss this. From a $1.8 billion real estate lawsuit shaking up agent commissions to the military's hidden advantage in property investments, our experts break down the new challenges and opportunities. Will foreclosure trends lead to a crash? How should you prepare for 2025? Don't miss these crucial insights. Hit like and subscribe to stay ahead. Today, on Real Estate in Review, we will summarize the following videos. From Ken McElroy, we have new policy, just changed real estate forever. From BiggerPockets, we have broke to millionaire in 5 years, military real estate investing. From Sachs Realty, we have home foreclosures, reality of personal financial trouble. From Jason Walter, we have in 2025, this is what will happen to the U.S. housing market. From Real Estate Mindset, we have expert, vicious correction headed for housing market. Welcome back to the Ken McElroy channel, the place where we unravel the mysteries of real estate. In today's explosive episode, Ken sits down with Jason Hartman to dive into an unprecedented change in the real estate market. Trust us, you won't want to miss this. The core of this video is a deep dive into a monumental shift in the real estate landscape, triggered by a gigantic $1.8 billion antitrust lawsuit loss by the National Association of Realtors, NAR. This shift hinges on how realtor commissions will now be handled, fundamentally altering the dynamics of how properties are bought and sold in the United States. Here are the key points discussed by Jason Hartman, NAR lawsuit and settlement. The NAR, a colossal trade organization with 1.5 million members, lost a nearly $6 billion lawsuit but settled for $400 million. The lawsuit centered around antitrust and price-fixing issues connected to realtor commissions. Changes to realtor commissions. Previously, sellers typically paid a combined commission, split between their agent and the buyer's agent. This is now forbidden. Now, buyers are responsible for paying their agents, creating potential chaos and friction in the market. Impact on market efficiency. The U.S.'s unique Cooperative Multiple Listing Service, MLS, will become fragmented, leading to inefficiencies. Like many other countries, buyers will now have to navigate different brokers for different properties. Quotes and examples. Jason analogizes the situation to buying stocks from different brokers. It's going to be way less efficient. Sellers might find it easier, while buyers and their agents face new challenges and potential distrust. Jason Hartman made the following predictions. Real estate industry disarray. Jason predicts that the real estate industry will go through a period of significant chaos. Market inefficiencies will create opportunities for those with connections and industry knowledge, even as it becomes tougher for the average buyer. Continued high prices. With the supply remaining constrained and economic conditions making it difficult to add new housing inventory, high property prices are likely to persist. Jason concludes that while this new policy introduces chaos and disruption, it also opens new avenues for strategic investors willing to adapt. For the average homebuyer and real estate agents, however, the process will become complicated and more onerous. Ken and Jason advise viewers to be prepared and leverage expertise and relationships to navigate this shifting terrain. For those interested in how these changes could offer investment opportunities, stay tuned for more insights and strategies. Hey, BiggerPockets family! On today's episode, we've got an incredible story just in time for the 4th of July. We're chatting with veteran and seasoned real estate investor David Perry about how military members, yes, you, can start investing in real estate. And even if you're not in the service, there's plenty of juicy advice for everyone here. The core message David delivers is that real estate investing is a golden opportunity for military members to build wealth. He argues that the military lifestyle uniquely positions service members to start early, take risks, and leverage their benefits, such as the VA loan, to achieve financial freedom. Here are the key points discussed by David Perry, a Marine Corps veteran who went from broke to millionaire in just 5 years, using smart real estate investments. David's journey. David joined the Marine Corps in 2008, spent his first 7 years like a typical 20-year-old, Harleys, tattoos, and booze. His financial outlook changed drastically after reading Rich Dad, Poor Dad in 2015, shifting him from nearly broke to a millionaire in just 5 years. Benefits for military members. Military members move frequently and receive a housing allowance that's tax-exempt. The VA loan provides zero-down financing, no minimum credit score, and favorable interest rates. Military members are practically set up to win. VA loan insights. VA loans are the best primary residence loans ever. Zero down payment, no MIP, and rates are competitive. David also explains the lesser-known advantages like VA loans being assumable and the option for an interest rate reduction refinance loan, IRRL. David's first investment bought his first duplex in Missouri, drastically reducing his housing costs and eventually turning it into a cash flow machine. Used insurance money from a destroyed Harley as a down payment. Talk about turning lemons into lemonade. David Perry, a Marine Corps veteran who went from broke to millionaire in just 5 years, using smart real estate investments, made the following predictions. Increased popularity in military real estate investing. As more service members learn about these benefits, David predicts a surge in military personnel investing in real estate for financial independence. Wider use of VA loans. David expects an increase in the number of military families leveraging VA loans, especially with the rising interest rates making assumable loans attractive to buyers. David's overall thesis underscores that with the right knowledge and tools, military members can turn their service benefits into a substantial financial advantage. He calls on service members to start investing early, leverage the VA loan, and take calculated risks to achieve financial freedom. And for all you non-military folks, stay tuned to see how you might benefit from these insights too. Welcome to Tuesday Night Live on Sachs Realty, your go-to place for anything and everything real estate. Todd introduces us to John Hoffman from Why Rent Real Estate. He's here to discuss the nitty-gritty of home foreclosures, their impact on personal finances, and the unvarnished truths of the real estate business. John's in the trenches, dealing with evictions and cleanups, and tonight, we're diving deep into these heavy topics with a light touch. The core thesis of this discussion revolves around the rising issue of foreclosures and the reality of personal financial trouble in the housing market. John argues that the current economic conditions and legislative actions have led to an unsustainable increase in home foreclosures, and there's a growing disconnect between the market's appearance and its underlying issues. Here are the key points discussed by John Hoffman. Current foreclosure status. Foreclosures and evictions are an unfortunate reality. John confronts, involving trips to properties often with the sheriff. John reports that even though inventory is relatively low in some areas like the Midwest, in other regions like Maryland, inventory is skyrocketing. Case study: inventory in places like Maryland is high, leading to panicking sellers who are slashing prices if homes stay on the market too long. Impact of loan modifications. Many homeowners have undergone loan modifications, but these do not always solve the problem. Often, these homes are improperly maintained and end in ruin. The loan mod process leaves homes in severe disrepair, leading to extensive damage and loss in value. Pricing dynamics. In areas like the Midwest, homes under $300,000 are snapped up, irrespective of condition, while higher-priced homes often sit longer on the market. Areas like Chicago are seeing nearly 101% sale-to-list price ratios, indicating strong demand, but also pointing to backward-looking data on inventory. Eviction realities. Eviction processes can take years, during which the homes often deteriorate. An example property showed devastating damage after being occupied without payment for over 5 years. Legal processes demand patience and significant resources, making it cumbersome for lenders and brutally uncomfortable for borrowers. John Hoffman made the following predictions. Rise in foreclosures. John predicts a significant backlog of foreclosures waiting to hit the market due to current protections and loan modifications. These conditions could lead to a significant correction in the real estate market. Impact of loan modifications. Many current loan modifications are not sustainable long-term, leading to future defaults and a surge in distressed properties. He expects more complex evictions and a tougher housing market. John Hoffman emphasizes caution and preparedness in the current real estate climate. He highlights the need for better legislative frameworks and more realistic approaches to lending and foreclosure. The call to action is clear. Whether you're buying or selling, be well-informed and stay ahead of potential financial pitfalls. Hey folks, welcome back to Jason Walter's channel where we dive into the latest real estate trends to help you navigate the housing market. In today's video, our knowledgeable host Jason Walter takes on the recently released Fannie Mae's predictions for the U.S. housing market through 2025. Jason, a seasoned real estate agent with vast experience in market trends, offers his expert insight. So buckle up because we're about to dive into some serious real estate analytics. Today's video deciphers Fannie Mae's recent downgrade in their projections for U.S. home sales, housing starts, mortgage rates, and home prices leading up to 2025. The focus is on the persistent affordability issues affecting home sales and the notable variations in inventory levels across different regions of the U.S. Jason thoroughly dissects these forecasts, offering a snapshot of how these factors interplay to paint a picture of the upcoming housing market landscape. Here are the key points discussed by Jason Walter. Housing affordability constraints. Housing affordability remains a primary barrier for home sales, with home prices and mortgage rates still at high levels. For example, Realtor.com data from June 27 shows a 7.4% increase in new listings and a 36.1% year-over-year rise in active listings. Regional inventory variations. Northeast sees a significant decrease in houses for sale compared to pre-COVID levels, when the Phoenix, Austin, and New Orleans markets observe substantial increases. Notable examples include Boston, where inventory is down by 50%, and Austin, TX, where it's up by 35%. Pending home sales data. Pending home sales are at record lows, with a noted 6.6% year-over-year decline, showing weakened home buying demand. Fannie Mae's forecasts downgraded total home sales forecast to 4.82 million homes in 2024, a 1.3% annual decrease. The recent rise in listings is not converting into sales. Jason Walter made the following predictions. Home sales trends. Fannie Mae predicts a modest 1% rise in home sales for 2024 after a dismal 28-year low in 2023. For 2025, they forecast a recovery with sales increasing by 9% compared to 2024. Mortgage rate fluctuations. Expect the 30-year fixed mortgage rates to trend downwards slowly, averaging 6.8% in 2024 and possibly hitting 6.3% by the end of 2025. Construction starts. Single-family housing starts are expected to increase by 9% in 2024 and by 2.4% in 2025. Multifamily units will likely see a notable decrease in starts by 27% in 2024, followed by a small rise of 5.1% in 2025. To sum it up, Fannie Mae's forecast paints a mixed picture of the U.S. housing market through 2025. While affordability issues and high mortgage rates continue to plague the market, there are pockets of recovery expected in terms of sales and new constructions. Nonetheless, Jason emphasizes the importance of looking at regional data rather than national averages to get a true sense of market dynamics. So keep your eyes peeled on those local trends and, most importantly, don't forget to like and subscribe for more insightful videos. Welcome back to Real Estate Mindset. Today, host Travis brings us more sizzling insights into the real estate market, delivered straight from the moving chaos of his own life. Seriously, the guy's amid a mold-induced move. Today's video promises to be absolutely bonkers as we dive into the nitty-gritty of a potential housing market correction. The core thesis of the video revolves around an impending housing market correction. Travis explores why this correction is likely to occur, backed by alarming data and various expert opinions. He argues that the triple whammy of high home prices, high interest rates, and low income makes the current housing market unsustainable, setting the stage for a significant downturn. Here are the key points discussed by Travis. Market trends and indicators experts, strategists, and economists are increasingly predicting a home price correction in several metro areas, including Washington, D.C., Miami, and Milwaukee. This correction is anticipated as home prices have soared nearly 50% in 2 years, while real income has declined. Triple whammy effect. Travis explains the market's current unsustainability due to the triple whammy of high prices, high interest rates, and low income. He emphasizes how this combination is leading to longer market days and increasing inventory, signals of a looming correction. Buyer behavior and market misinformation. Travis notes that buyers in his community are primarily strong, cash-ready, and diligent, Yet he cautions against buying now due to the likelihood of widespread buyer's remorse. He criticizes real estate professionals for using family needs as a sales tactic and argues for a strong, rational mindset when making purchase decisions. Housing market data. The Business Insider article reference discusses signs of the upcoming housing correction, such as plateaued construction starts and worrying signals from high borrowing costs. Unemployment upticks and commercial real estate distress are added indicators of an impending market downturn. Travis made the following predictions. Housing market correction. Travis predicts a significant home price correction driven by new home supply increasing and existing home sales struggling due to high prices and interest rates. He foresees this correction happening over the next year, particularly affecting new home constructions and markets with substantial investment influx. Commercial real estate distress. Commercial property owners refinancing at higher interest rates and the $900 billion in maturing debt will lead to elevated distress and potential foreclosures. This financial strain could spill over, exacerbating the residential market correction. Travis wraps up by emphasizing the critical importance of timing your real estate purchases to avoid financial pitfalls. He encourages viewers to stay informed and cautious, urging them to avoid impulsive buying decisions prompted by market misinformation. In this series, various experts provide a comprehensive outlook on the evolving real estate landscape. Ken McElroy and Jason Hartman discuss the chaotic aftermath of a groundbreaking $1.8 billion lawsuit affecting realtor commissions, predicting continued high prices and market inefficiencies. David Perry highlights the military's unique advantages in real estate investing, forecasting increased VA loan usage and a surge in military real estate activity. John Hoffman warns of rising foreclosures due to unsustainable loan modifications and legislative issues, while Jason Walter analyzes Fannie Mae's predictions for a mixed housing market till 2025. Travis on Real Estate Mindset emphasizes the impending market correction driven by unsustainable high prices and low income. All agree on significant disruptions but offer different strategies and timelines. Stay tuned to stay informed and prepared. Thanks for watching Real Estate in Review for July 3rd, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.